Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenivek on Bloomberg Radio.
And of course, co-host of Bloomberg Tech, joining us now from San Francisco, where he is at OpenAI's Developer Day. Hey, Ed. Feels like we keep getting these big announcements. We're all getting a bit wary of them, what feels like this circular finance that we've talked with you about among those involved in the AI spend and build out. I heard Lisa Su say a win for AMD, a win for OpenAI. Feels like a win for everybody. Is it really? Do we know for certain?
Well, she also said that she has full confidence in OpenAI. And the reason she said that is I had made the point to her that OpenAI still has to come up with the money for this. The difference between the OpenAI and AMD deal compared with the OpenAI Nvidia deal is the structure. So it's almost the reverse. AMD will sign over stock to OpenAI only when they've met specific milestones, both operational and financial. So in the first instance, OpenAI has to fund, finance, and build 1 gigawatt of capacity. If they do that, AMD will give OpenAI some stock, or rather, technically, OpenAI has the right to buy a tranche of shares at a penny a piece. But the burden is still on them. And so the point I was making with Lisa is, have you seen into their books? Where are they going to get the money from to fund this, to bring it online?
Ed, could this be weird on the circular financing thing that, Nvidia could have this deal that could be worth up to $100 billion with OpenAI? Nvidia's invested $5 billion, or will invest $5 billion in Intel. And now you have, does that mean that Nvidia, if they have OpenAI equity, then they're kind of an owner, or could be an owner of AMD?
Exactly. Yeah, it's much more fair to say that the Nvidia OpenAI circumstance is circular financing, because Nvidia commits to making a $100 billion investment into OpenAI. We actually don't know if that's in the form of cash or if it would be like chips in lieu of cash, but they do take OpenAI equity. In this case, AMD passes its own shares to OpenAI, but not capital. And so if you're going to build 6 gigawatts of capacity over many years, that is like the peak energy demand of like a major US city. We're talking lots of money up front in capital expenditure, and OpenAI has got to do that. Now, we posed many questions to both Lisa Su and OpenAI President Greg Brockman, who was sat next to her. Will it be debt? Will you issue more equity? Will you do something else? And Greg Brockman said, well, look at all those mechanisms. And so there are many more questions still that we don't have answers to.
Well, that's, I guess, my thing is, like, why don't these companies just do deals? I'll buy you chips, I'll do my build, I'll do this thing the way we do it normally, rather than all of these big announcements with a lot of questions that feel like we don't really know that there's anything there.
The market is simply focused, irrespective of the mechanism for financing, on the revenue growth that comes out the other side, particularly like software names. And so that was the justification that Greg Brockman made. He said the revenue will come. As you know, we've been writing a lot about the debt markets underpinning this, and debt investors feel the same way. All I'd say is there is also a technology story. If you're going to build a data center and one of you is providing the chips and the others is going to use the capacity for software, it does make sense to partner and work together to make the engineering make sense.
If you're watching on Bloomberg TV or on YouTube or Bloomberg Originals, you've got this great graphic up that kind of helps us keep up. This is by no means exhaustive, but shows where some of the money has gone in recent months when it comes to this space. Again, by no means exhaustive. It's kind of like, Carol, we're like at a whiteboard and we're kind of connecting pieces, because to keep these things straight is pretty difficult.
Well, yeah, I mean, that's the thing, Ed. We need to all be smart. We are smart, and we keep seeing these deals coming at us. We hear people saying, well, when like a Meta reports and some other, the big hyperscalers, we do see the impact of the AI spend, but I do wonder if it's going to carry through our economy like everyone expects.
Well, in Meta's case, for example, they have a core legacy business that is advertising. And in most of the most recent quarters, they've demonstrated significant top-line growth and to a certain extent bottom-line growth, which is them saying, we invested in AI made our ads better and more valuable, we're making more money from it. With ChatGPT, it's a lot harder to see that, but that's why here at Developer Day, it's really important. So the piece of news that came out from the keynote was they now have 800 million weekly users, active users of ChatGPT. The data point that market participants keep hitting me over the head with is, how many of those free users are converted to being paid subscribers? Because unless you have that data, we can't know what the top line growth for OpenAI looks like. But look in the markets right now. I mean, you guys will have to tell me, I don't have a Bloomberg in front of me, but I saw a pool of about a dozen stocks that jumped in the last hour just because they got name checked by OpenAI here today. And it's by association, the idea that if using ChatGPT, you can access third-party apps or third-party company offerings, everyone's going to make money. You know, the market has a pretty simple logic in that respect.
Yeah, for those who do have Bloombergs in front of them, just type in NI movers into the Bloomberg terminal. Cisco Systems shares up to session high during OpenAI event. Figma shares extend gain to 16% after being mentioned at OpenAI event. Salesforce shares also jump up 2.6% during the OpenAI event. HubSpot, Zillow, TripAdvisor, Carol, all moving higher as a result of what was talked about at the OpenAI event.
And this goes back to Ed, you know, you were trying to press Sue and, you know, in your conversation. And
Mr.
I just,
Brockman.
Right. And I just think about, like, what are the big questions that still remain for you? You're reporting on these ins and outs. You're there at this event. We think about OpenAI a lot. We talk about ChatGPT a lot. Who's to say that there isn't some other, you know, chat that comes in and takes over? I don't know. There's just a lot going on. What are the big questions that remain in a day when we get this big announcement? What wasn't answered for you still?
Yeah, I think the financing, you know, I think in any corner of the Bloomberg newsroom, you've got to understand the debt markets, because look at the role that debt played in previous financial crisis, the dot-com bubble, what happened with Silicon Valley Bank, what happened in Asia earlier in the 2000s. I wasn't around then, but debt is a big underpinning here. And I think the signal that Greg Brockman gave us was they'll look at all mechanisms, including debt. So that's one part of it. On the other hand, I'm a technology journalist and technology matters. OpenAI is going to use AMD chips for inference. Inference is where you run the model, not training. You are actually running people's queries and workloads. And if you look at all the movers that Tim listed today, what OpenAI was basically saying is ChatGPT is becoming an operating system. You use it for a number of functions, but you can also integrate it with all the other software you're using. And actually, that's a pretty clear answer to some of the questions about will revenue be generated from this. People use all of these platforms for hours each day, and you know, the market seems to buy that if they can build the capacity of AMD in the timeline that they've said they will, they can actually start doing things of use.
Isn't it wild, though? Ryan Vlastelica has this great story, and the headline on it is OpenAI is fast becoming a whale in the stock market that it has shunned. I mean, OpenAI is not a publicly traded company, and yet Tim put down a bunch of names that are moving as a result of this deal. Last week, we saw OpenAI sending shares of e-commerce companies like Shopify, Etsy, soaring after unveiling an instant buy option in ChatGPT. I mean, it is remarkable. The narrative, the market moves that are revolving around OpenAI, which again makes me say, what are we missing?
One of the things that I do each day. Yeah, one of the things I do each day, and I know you guys do it as well, when I first log on to my Bloomberg, I do NI Globe Wrap, and I look at the markets wrap, because they always have a pretty good handle on the sentiment of the morning. And last Wednesday or Thursday, it was equity markets push higher on OpenAI enthusiasm. It was the confirmation of OpenAI's $500 billion valuation in the private markets that was driving sentiment in the public equity markets. And that was well sourced. It's based on lots of conversations with market participants. That is, again, a reflection of the names that Tim read out today. OpenAI, a private company, is driving all kinds of markets at the moment with what it is saying, and to an equal extent, the activity it is doing in both hardware and software.
Well, there's a lot of activity happening behind you, Ed, at the OpenAI Developer Day conference. In just about an hour, we're going to hear from you again. You're going to be speaking with OpenAI COO Brad Lightcap. You're going to have a conversation with him that I'm sure is going to touch on a lot of these themes. Before then, though, the reason all of these companies are moving, can you talk a little bit about this idea of OpenAI, or rather ChatGPT, becoming an operating system, and how these publicly traded third-party companies are starting to use the technology to make their software, to make whatever they're offering, the services, better?
Yeah, for those listening on radio and watching on TV that are familiar with software, what OpenAI announced was very simple: API access for several third parties to ChatGPT, and they demonstrated it on stage. So I use ChatGPT for hours each day, but the idea is you link it to, say, your Figma platform or your Spotify account even, and you can use some of the features of those platforms within ChatGPT. That was a sort of direct catalyst to those stocks moving. But what they also spoke about on stage, and Sam Altman did a pretty good job of kind of explaining it, is that ChatGPT is going to basically act much like the App Store does on OS, right, with Apple. You have a community of developers. Those are all the people that are here today, the thousands of them, that are building applications. And where will they publish those applications? Well, they'll be reviewed by OpenAI, and they will be integrated either as APIs or standalone applications within ChatGPT. That is how the economy around the Android Play Store, the Apple iOS Store works. You have people build software, and then you have a place, a library, a catalog where all of those things list. In some cases, you charge an ad hoc subscription to use those applications. And that's kind of what OpenAI is saying here that ChatGPT can be. Very interesting, although it's also contingent on the developer community stepping up and doing it.
Who needs to be worried? Alphabet? Like, who needs to be worried as we watch this unfold and everything seemed to kind of revolve around ChatGPT, OpenAI, and as you said, like, if this is one of the new big search engines going forward, I mean, Alphabet with its own search engines and making its own pivot, do they need to be worried though?
Yeah, I mean, you guys, I actually should have checked and I just didn't, but I don't know what Apple, Microsoft, or Alphabet did during that keynote. I mean, did they go down or up?
Alphabet's right now up about 2%, so it's near its highs of the session. And if we
Microsoft's up 2.4%.
Yeah, so like,
at its high of the session.
All in, right?
I don't know the answer to that about whether they'd be worried. I mean, we've done a lot of reporting on OpenAI going its own way and having more independence from Microsoft. The original idea was that Microsoft would use OpenAI's underlying work in models to improve their own software capabilities. Of course, one of the recent developments is Microsoft is using Anthropic for its own in-house software applications and has looked at one of OpenAI's rivals. But you are right, it's about OpenAI wanting to do more across software. One of the other beneficiaries in the keynote was, I think, Salesforce. You can correct me, Tim, if I'm wrong. I saw Salesforce as one of the movers, ServiceNow as well. It's just another sales channel in some sense. You can access another person's software through ChatGPT, and the market, again, its logic is very simple, that it drives use, and that's good when you have a partnership with OpenAI.
Salesforce shares up 3% right now, up as much as 4.2% during that keynote. Ed Ludlow, he's at OpenAI's Developer Day.
Stay with us. More from Bloomberg Businessweek Daily coming up after this. You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's bring in Mandeep Singh, Global Head of Tech Research at Bloomberg Intelligence. He joins us here in the Bloomberg Interactive Brokers studio. So I just want to start with the validation or not of AMD's technology here. Ed reminded us that this is an inference deal, not a training deal. But how should we look at this in the context of Nvidia being the standout leader when it comes to this tech?
Look, I mean, for AMD, there weren't many options. When you look at, Nvidia and Broadcom partnering with all the hyperscalers, AMD clearly has just 2% market share right now. And what do you do when Nvidia announces a big investment in OpenAI to the tune of 100 billion or multi-years? And in this case, I think AMD had to do something. So I'm sure they gave a very sweet deal to OpenAI in terms of, the margins they're going to charge OpenAI, the level of custom silicon work that they are willing to do for OpenAI. And OpenAI has a great advantage that it can, bargain and really get these sweet deals right now with everyone.
A sweet deal meaning here's 160 million shares of our company at a penny a piece?
Maybe.
And look,
I don't know.
Nobody can look that far out, but the fact that Nvidia is willing to spend $10 billion, in OpenAI, and AMD gave them this option that they could buy the shares, if it hits a certain level, that just goes to show that OpenAI wants to show that it has the power, not the chip makers. And so over time, if you look at, software cycles, the application is the sticky part. It's never the chips or the architecture. And that's what OpenAI is saying. Look, guys, we have the best models.
Right.
We have ChatGPT, the application. So that's the end product. And they want a diversification in terms of the inference capacity.
Listen, we have this chart, and for those who are on radio, it's just showing all of the deals that OpenAI is doing
or some
with
of
different
them.
companies, or some of the deals.
Not all of them, yeah.
Whether it's Microsoft, although they've been pulling back and lining up other deals. We're trying to so hard be smart about this, because it's easy to get caught up in it. And it does feel like this has become increasingly a momentum trade. I'm not saying people aren't making money out of it, but how do we make sense? Because is there a chance that OpenAI and ChatGPT is not ultimately the big model or the big next generation search engine for everybody? Like how do we be smart about this spend? Because is some of it potentially fluffy and not going to go anywhere?
So I know there are references to circular financing and all that, but the best way to think about this is the concentration that you see among the players. Whether it's, Nvidia being exposed to the hyperscalers, and now the number of hyperscalers are growing. Because OpenAI was dependent on Microsoft, like you said. Now it's trying to become an independent hyperscale vendor. In fact, they said they may open their own data centers. They have a $300 billion deal with Oracle now. So they want to be a hyperscaler who does end-to-end work like Google does. It has its own chip.
Right.
It processes 980 trillion tokens per month. And that's what, OpenAI wants to get to, that they have their own chip. They use chips from AMD, Nvidia, and not just rely on one provider.
But they are still a private company. What are things that we might not know in their financials right now?
That they have negative gross margins. And so one of the ways that they are trying to fix that is by arbitraging against the semiconductor chip makers who are giving them the compute capacity. And we know that this stuff, like one of the things with generative AI, it's very compute intensive.
Right.
And it's not changing. Even though we have GPT-5, there's nothing that has changed in terms of compute efficiency. It still requires 10 times more compute than your CPUs that were used for, traditional software. So it is an expensive technology.
Okay, hold on though. You said, I don't want to push aside the circular financing thing, because this is kind of blowing my mind here.
Yeah.
If Nvidia has a deal with OpenAI that's up to $100 billion, so let's say Nvidia gets equity in OpenAI as a result of that.
Yeah.
Then OpenAI then gets equity in AMD as a result of this deal. Would that essentially mean that Nvidia is an owner of AMD?
No, I think that's too far-fetched. I mean, think of companies having minority stakes. So there are instances where Google has a minority stake in Lyft. There's so many instances.
Because Google Ventures was an investor in it early on, and that's Google's venture capital arm. And you can see that in the past within Google's Maps application. It used to suggest, I don't know if it still does, it would suggest Lyft rides. It made sense.
Yeah. And so, look, in this case,
they're not competitors, though.
Because the numbers are getting so big, you need financing from somewhere. Right now, it was the hyperscalers. The 4 hyperscalers were the biggest buyers of AI data center infrastructure capacity. They were the ones who were building it. And now it's like OpenAI is saying, we want to be in the business of building AI data centers, because they look at Google and say, they are running their data centers a lot more efficiently than we are, even though we have an alliance with Microsoft. So OpenAI's big bet is if I have more compute capacity, one, I can undercut everyone else in terms of offering my model, and I'll be more aggressive with pricing. And once I have the customer on board, I can sell him more services. But just being a model provider is not a good business. That's what OpenAI is suggesting, that having the best model is not a good moat. Ultimately, everyone will catch up in terms of their model capacity. And then they will go across different models.
So they're evolving very quickly.
They are. And that's the big bet that they're making is if I have my own infrastructure and I have my own application, I'll be aggressive with pricing.
So who needs to be worried then? Do the hyperscalers and their big, data center build? Like, who needs to be worried here?
NVIDIA. I mean, clearly, NVIDIA having 75% gross margin, they really have the best chip out there. They have the best system. But now that OpenAI is saying, I am going to use AMD, and I have incentive that AMD does well, who does it hurt? Ultimately, NVIDIA has to lower its pricing. In fact, the $10 billion investment is a way for NVIDIA to lower its prices for OpenAI. They're not doing it directly, but they're giving a $10 billion rebate saying, okay, you buy certain capacity for a 1 gigawatt data center, we'll give you $10 billion rebate. That's lowering your gross margins.
NVIDIA shares down about 1% right now. Still, though, a $4.5 trillion company.
But doesn't that NVIDIA OpenAI feel a little weird? That deal?
Why? What do you mean?
Well, because it's like they're fueling, right? Like the selling of NVIDIA chips and then giving money. Like
NVIDIA,
it just feels...
Here's money that you are then going to pay back to us.
And look, the biggest constraint right now is power.
Creating almost false demand, which makes me a little nervous.
No, so I want to concede NVIDIA has by far the best chip when it comes to power constraints that are, I think, the biggest limiting factor when it comes to build out. We talk about lead times. Power has the longest lead time out there out of all the supply chains that we have seen. It's just not fathomable to, add more gigawatt capacity. It takes time. It's very long lead time. And so from that perspective, NVIDIA chips are the most performant when it comes to the power that's available. That's why everyone buys NVIDIA. And that is a moat. But now what OpenAI is saying is we will help AMD customize their chip to the extent that they can offer us a viable alternative for inferencing, not for training. We'll still train our models using NVIDIA because it's the best chip. But for inferencing, we will help handhold AMD and customize their silicon so that we can use it for inferencing.
Are you done? Because I want to change the subject.
No, but that makes sense.
I want to make sure you're satisfied.
I am satisfied. But it just makes sense. I think this market is evolving.
So Carol asked Mandeep, who should be worried?
Baton is yours.
And I thought Mandeep was going to say all of us, all of you, everybody, because I've been seeing what OpenAI is doing with Sora over the last few days. Have you guys seen these videos? So in some cases, you have people who are able to use this making videos of Sam Altman going on ice raids or Sam Altman stealing GPUs from somewhere, or you have somebody in Hollywood showing the effect that it could have on Hollywood, and he put a main character from a Netflix show, copyrighted certainly, in a video. I think maybe it was with Shrek. I don't even remember. The stuff looks not quite. It's not quite there. But it does look like a friend of mine can jump off a building like Superman.
Absolutely.
Or Stephen Hawking, in a famous case now the last few days, is in a half pipe at the X Games. I mean, this stuff is pretty incredible.
Yeah, I mean, the number of creators, I think, will grow. You can become a creator. You don't need a camera or, a professional setup to do that.
It's a little scary.
It is scary. But with that being said, everyone out there is competing for engagement time. That's what all of these companies are doing, whether it's Meta or Alphabet with YouTube. And look, for Meta or TikTok, it's all about keeping people on their platform. Now, if Sora is able to generate good content that people are engaging with, suddenly that attention time span shifts from Meta to Sora.
Okay, I want to paint a bleak future for us. Because
this is what's going through my head. Because are we engaging with stuff that we should be engaging with? Is kind of my thinking.
Let's say it gets to the point where the people are getting so good at creating this stuff without actually doing it with skills.
Yeah.
Okay, so we're already in a low hire, low fire environment right now. The concern is that AI is just going to decimate some white collar jobs. Who are Meta Platforms advertisers going to be if none of us have jobs and can afford to spend any money on anything because AI has just displaced us?
Well, I mean, look, I think like with
is that bleak
Oh
enough?
my God.
anything else,
That's
right now
dark.
the biggest use case out there for generative AI is coding agent. I mean, imagine the developer community has always been highly sought after, and they will have to, transform in terms of their jobs changing and how they use these tools. So, to my mind, customer service, coding agent, these are the type of profiles that are illustrative of the power of generative AI in terms of bringing productivity around what is the current workflow. And everyone seems to be adjusting and evolving. And everyone talks about how productive the developers are there. Every hyperscaler has said their developers are 30 to 35% more productive because of generative AI.
I mean,
So that's one side of it. That's he's the optimist. He's always the optimist.
I
Here
know.
you and I are just thinking, okay, well, no one's going to be working and everyone's going to be convinced by deep fakes. Yeah, I know you're concerned about the political implications of something like
I'm
this.
just concerned about
Have you seen these videos? They're insane.
Yeah, I'm not happy about the political videos. And I am concerned about a society where we're just glued to our phones watching stupid stuff. And forgive me.
Yeah.
I don't know if I can say this, but I'm going to go there. And I wonder at what point is it just too much? Or is that just a small percentage of where all of this is going? And I mean, Tim and I have used ChatGPT for work, and we see the productive element of it. So I wonder, is all the silly videos just a small portion?
So I want to go back to the cost comment that I made earlier. This technology is expensive. To generate that type of video, you're spending a pretty decent chunk of compute, and it's costing you a lot. So now I think at some point they
but
will...
who's paying
Exactly.
for it?
Right
I mean,
now,
if I
OpenAI is
say-
subsidizing
Your electric
Right.
bill.
Electric bill, yes. You
You're
are
paying for
paying
that.
up
That's
through
right.
power. They're absolutely right. And also OpenAI is subsidizing. There will be a point when they will be under pressure to show profitability. And then you have to figure out what are the solid use cases that you want to continue with.
Right.
And what are the ones where you're spending compute for an output that is not even as good as, an average human produced output. And so that's where the cost benefit analysis, I think, will weed out a lot of the use cases where you're just throwing compute and the output may not improve or the curve is just too steep.
Right.
And you just can't keep spending more compute and consuming more power. That is inflating a lot of things that you don't want to see.
No, you're absolutely right. That makes a lot of sense. I've already said to my husband, why our power bills are high? Blame AI. It's not my
AI.
fault. It's not because I left lights on.
And turn the light off.
Which he does say. Mandeep Singh, thank you.
We go
Thank you.
everywhere with them.
I know. What?
We go everywhere with them.
I know. I mean, you're just the best. Thank you, as always.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, as you know, obviously talking a lot about finance, as we do here regularly at Bloomberg, which also means the intersection of finance, investors, and sports in a big way. Rick Welts has been in the job as Chief Executive Officer of the Dallas Mavericks for a little more than 9 months, took over as CEO of the NBA franchise. That was on January 1st of this year, following Sid Marshall's nearly 7-year tenure. His career spans nearly 50 years in sports and entertainment. He has held roles as president and COO of the Golden State Warriors, president of the NBA's Phoenix Suns, the WNBA's Phoenix Mercury, and the NBA's senior vice president, chief marketing officer, and also president of NBA Properties. To say he has seen a lot is not even fair. Let's head to the Bloomberg News Bureau in Dallas. With us is Rick Welts, CEO of the Dallas Mavericks, and Bloomberg News Texas Bureau Chief Julie Fine, who watches and reports and talks about this space so much. Rick, it's great to have you there in Dallas with Julie. I I just want to start with that intersection of business and sports, investors and sports. 20 minutes ago, we were talking with Jim Esposito, president of Citadel Securities. Every day, it seems, or every week, we have a story about Apollo, Ares, different investment firms, the money in sports. You've been in the world for a long time, seen the rise of money in sports and the rise of financial firms in sports. Is this a good thing in your view?
Well, it's not only a good thing, I think it's an essential thing. Really, when you look at the valuations of franchises today, there's really a smaller and smaller universe of individuals who would either choose to or have the ability to purchase a Major League Sports franchise today. So private equity's involvement is going to be something that's going to be absolutely essential going forward.
You know, Rick, when you talk about the future of sports, I do want to get in with you the streaming rights. You know, Dallas Mavericks, they have Mavs Television, and you actually are one of the few that also have a local deal, so you can see all the games here as well. But what do you see as the future of how we watch sports?
Well, it's unfolding right now. The NBA's entering into a brand new set of broadcast agreements for this season. So we're adding Peacock and NBC. We're adding Amazon Prime. And we have to go where our viewers are watching us, right? And especially our younger viewers today who are just accustomed to using streaming as their primary platform in consuming sports.
You know, let's talk a little bit about your viewers and your fans. They had quite a shock last year with the trade of Luka Doncic. You start tonight, you kick off your preseason. Do you feel that you really managed to bridge that gap with them?
Well, you know, this is my favorite time of year, right? Because there's optimism. As I checked the standings this morning, we're undefeated. We haven't played a game, and every team feels the same way, right? But we had, that trade on February 1st, and then this is such a crazy industry, right? 100 days later, on May 12th, with a 1.8% chance of winning the NBA draft lottery, somehow we came away with the number one pick, and with that Cooper flag, and that's what's starting tonight, a new era of Dallas Mavericks basketball.
You know, when you talk about the finances of sports, last year you did lose some sponsors, and there were some season ticket holders that were, very upset about this trade. But where did you land now?
You know, sports is such a wonderful thing because it can change on a dime, and it did on May 12th with the drafting of Cooper flag. The most decorated 18-year-old player in the history of basketball who plays his first game for the Mavericks tonight. And really everything changes. The optimism going into this season changed the business environment completely. We're third in the league in new season ticket sales. We'll finish this year ahead in revenue and season ticket sales, which, I wasn't quite sure was going to happen on February 1st.
So ahead of the year with season ticket sales now, but on the business question and on the sponsors returning to the organization, can you give us some numbers behind sponsorships or how Flag has affected the way that companies are interested in partnering with the Mavs?
Well, your second point is really spot on because the interest around Cooper Flag and his potential all-star career in the NBA. But here in Dallas, it's combined with the optimism and energy around building a new arena and entertainment district to replace American Airlines Center where we played for the past 25 years. So it's a wonderful combination from a business standpoint because we have the optimism of the team, but also a really exciting prospect about what we're going to be building in Dallas, which will be the future of our franchise.
Well, that's where we want to go too in terms of what you are building in terms of a new arena. Mavs lease is up in 2031, Rick. You share an arena with the Dallas Stars, but you've made it clear that the next arena that you have will be a basketball venue. I think the last time that we all caught up with you at Bloomberg, you said you had narrowed it down to several sites. So what can you tell us? Or feel free to announce where you guys are going to do it. We would love to know.
I really wish I could do that. We're hoping by the end of the first quarter of 26 that we're going to have identified a site. Listen, our commitment, we've been very clear, we want to be in the city of Dallas. And the city has been a great partner to this point in helping us identify sites. Not easy to do because we're looking for a minimum of 50 acres to build the arena and an entertainment district. So not a lot of 50-acre parcels that you can even consider in Dallas. But we have narrowed it down, and we're doing our due diligence on those. Very complicated project. These are very complicated things to get done. But again, we're hoping by the end of the first quarter next year to be able to announce where we're going to be.
Of course, the team owners, the Adelson family, they've made no secret they would like to see casino gambling in Texas. You follow the Texas legislature. I follow the Texas legislature. That did not get anywhere this year. Does that affect really the plans and what's going to be next for the stadium?
No, as we look forward, we don't think the prospects for that happening in Texas anytime soon are very likely. So the project that we're going to build has no casino component to it. We're talking about hotels, we're talking about retail, we're talking about restaurants, we're talking about big gathering places and an arena. So there's no casino component.
Something you don't see that often is a team opening their preseason not in their arena. You will be playing tonight in Dickies in Fort Worth, a much smaller arena, and that's really where people will get their first vision of Cooper Flag. Can you talk about that decision and what you're hoping comes out of the evening?
Yeah, well, it was really in COVID when the commitment was made to play this game. The fact that it's going to be Cooper's first game in a Mavericks uniform in our home market, and we think of Dallas-Fort Worth as our home market. I think Fort Worth looks at the Mavericks as their NBA team. So I think it's going to be a super exciting night. It's going to be the first time we'll get to see Cooper, and I think there's a big buzz about that.
I think there's people that are interested in seeing Cooper globally. Speaking of global sports, the World Cup will be holding 9 matches in Dallas. That's the most in any city in North America. What does that do for this city this whole area, in terms of being branded really a sports town?
I don't think people yet realize the impact this is going to have. The whole world is going to be focused on this. And I'm a huge soccer fan, maybe this far behind NBA basketball. I own an ownership interest in a couple soccer clubs. So I think what's going to unfold here is really going to put Dallas on the map as a soccer mecca.
Hey, I want to ask a little bit Julie asked about gambling on site and the potential for that. Obviously, that's not going to happen anytime soon. What about those sports gaming and the way that gaming and the ability for people to actually wager on these games has attracted or increased viewership, has attracted or increased engagement? How do you measure that at the Mavs organization?
Well, I think we're all tracking it and watching this unfold in real time because, the argument, Adam Silver was really the first of the commissioners to come out in favor of it and really talking about the level of engagement that it does provide and how people want to consume our games now. So I think it's been nothing but positive at this point. Listen, the story hasn't been written yet on how this will completely play out. But I think it's been nothing but additive in terms of people's interest in watching games and staying and watching more than they have historically in the past.
You mentioned Adam Silver. CBS News reporting last week as the NBA continues to grow its presence overseas, Rick, Silver outlining a bold vision for the future that could see teams from other continents playing U.S.-based franchises in the regular season or postseason. What do you think of that?
I think it's the most exciting time in NBA history, and I think the prospect of that, for me, I was hired in 1982 by David Stern, who was commissioner for the NBA for 30 years. I was the 35th employee of the NBA league office, and he's not with us anymore, but this would really be the culmination of that dream, the path that we went on to really understand basketball is the only other sport played worldwide other than soccer. And the NBA is a very unique league where all the best basketball players in the world play in one league. The idea that we could have another league in Europe, what we're doing in Africa today with our league in Africa, I think it's really the most exciting time ever for the globalization of our sport.
Rick, seconds. Are you having more fun today or back in 1969 when you began as a ball boy with the Supersonics?
I think I have the same level of excitement going into tonight's game as I probably did that first day I walked into a Seattle Supersonics locker room.
That's a good place to be. Thank you so much. Really appreciate your time always that you give to Bloomberg. That, of course, was Rick Welts, CEO of the Dallas Mavericks. And, of course, our thanks as well to Julie Fine. She is Texas Bureau Chief for Bloomberg News.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Right now, we want to bring in Leslie Marks. She's joining us this afternoon. Really appreciate her taking the time. She's CIO for equities at McKinsey Investments. The firm has $228 billion in assets under management. She joins us from Toronto. Leslie, good to have you with us on the program. Thanks for your patience. We're juggling a lot of live interviews all over the country right now, so appreciate it. Look, the story that we've been covering today has to do with everything with regard to AMD, OpenAI. AMD shares up 25% right now. The environment with regard to the investments that are being made in private companies and public companies. How are you looking at it with AI?
Well, exactly. I mean, AI is definitely the dominant thematic that is driving public equity markets today. And I think that people are looking at equities, and you're hearing people talk about, and I heard you and Carol both talking about the comparisons between today and the 1999-2000 era, as well as people inferring that, are we in bubble conditions here based on some of the deals? I don't think so. I mean, I think that the people that talk about us being in a bubble right now are those that maybe aren't long equities or, are underweight equities. And so there's some, speaking their own book. I just go back to, as an equity person, fundamentals. And the two primary fundamentals that an equity investor needs to focus on are earnings and what do we pay for those earnings. And that really comes, a lot of which comes from, of course, sentiment, which is extremely bullish right now, but also the outlook for interest rates. And I think your listeners have a very good understanding that a lower interest rate environment is generally good for multiples. So let's spend a minute here to talk about earnings, because earnings has been the big surprise or upside surprise in 2025. When you look at the factors that are driving equities, it's been primarily, of course, price momentum. The things that are going higher are what people want, of course, but also earnings momentum has been a top factor. And earnings momentum is a very strong fundamental that we can really anchor ourselves on and say that actually with these companies reporting strong earnings, we can feel comfortable with the higher valuations that they're trading at today.
All right. So is that you saying you are comfortable with the valuations that we're seeing today?
Yes. And I think when you look at valuations, what people point to mostly when they say that valuations are stretched is the valuations today versus historical. But what you have to think about is today, the margin profile of the S&P 500 is much higher than it has been historically. 10 years ago, the net margin for the S&P 500 was about 10%. Today, it's 13 to 14%. So you actually should be paying more for equities today than you have historically.
That's so interesting to hear, because I think there's a lot of people who are looking around right now saying, this doesn't necessarily feel like a comfortable environment to buy. And you said that, okay, well, people who might feel that way maybe aren't long equities, but what would you say to somebody who does have cash deployed in markets right now? How do you do it with valuations like this?
Well, I would say the most important thing for someone looking, to get into the market where, I totally understand the bias and the anchoring if you're not there right now, why you would feel uncomfortable investing at these levels. But there are lots of opportunities, and you have to be thinking about diversification. When you look at what happened in Japan overnight, to see that market up over 4.5% overnight, that's incredible. And it just highlights that there are opportunities that go beyond the top 10 names in the S&P 500. And that's where investors should be looking. They should be looking to diversify their holdings. You mentioned that I'm sitting here in Toronto right now. In Canada, the S&P TSX has been an outperformer when compared with the S&P 500. That might surprise people, but gold has been a big driver of that market. When you think about gold being at record highs, it's been a big driver of the S&P TSX, both on a price basis and earnings growth. So when investors are looking at where should I invest or should I invest today? We would say to them, look at diversifying your opportunities because there are opportunities globally. I mean, China is going through a very exciting time here around their technology, electric vehicles, robotics. You're seeing a lot of interest building in China.
Leslie?
And so I think that, yeah.
Forgive, but we've got to run. We've got a closing bell just coming at us. But we really appreciate your input. Leslie Marks over at McKenzie Investment.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.